Today's crypto news, July 16th. Has the worst already passed for Bitcoin? One research team just spotted a signal that historically shows up right around market bottoms. Welcome back to your daily crypto podcast. Today we've got 4 stories that each show a different piece of the bigger picture in this market. Let's get into it. Glassnode's research team found an interesting on-chain signal. Realized losses from Bitcoin holders who've held their coins for 1 to 2 years have started to stabilize and reverse after peaking. In past bear markets, that exact pattern has often shown up right around the time the market found its bottom. But Glassnode itself is careful to say this is just one piece of the puzzle, not confirmation. The level to watch is around $69,000, roughly where short-term holders' average buy price sits. If Bitcoin can break clearly above that, the recovery story gets a lot more credible. If not, that level stays a tough wall of resistance. Next up, some quieter but still important macro news. The Federal Reserve's Beige Book, released yesterday, showed 11 out of 12 Fed districts reporting slight to moderate economic growth. And more importantly, inflation pressure is starting to ease, largely thanks to falling fuel prices. Now, this report doesn't mention crypto even once, but it matters indirectly. If inflation really does keep cooling, the odds of a Fed rate cut go up. And historically, when interest rates fall, assets that don't pay yield, like Bitcoin, tend to respond well. So this is a quiet story today, but it could be setting the stage for bigger moves down the line. Third story, and this one's got a great headline hiding a much calmer reality. About 92 million ARB tokens unlocked today on Arbitrum, right as the token trades near its all-time low. Here's the twist though. These tokens aren't going to team wallets or early investors who are ready to sell. They're going straight into the Arbitrum DAO treasury, where they just sit until governance votes to spend them. Compare that to Arbitrum's unlock back in May 2024. Similar token count, but that one went to insiders and investors, and the price dropped right on schedule. This time, the immediate sell pressure is close to zero. The real risk isn't today. It's the slow drip of treasury spending over months, and traders who sell on the headline alone without reading the fine print. 2 quick hits before we wrap up. First, Ripple CEO Brad Garlinghouse said in a recent talk that an XRP transaction settles in about 4 seconds and costs a fraction of a penny, compared to Bitcoin, which can take up to 10 minutes and costs close to $10. Just keep in mind Bitcoin and XRP were never built for the exact same job, so this comparison is more marketing than a real head-to-head. Second, Solana crossed 300,000 holders of tokenized real-world assets for the first time, overtaking Ethereum, even though Ethereum still leads by total value, about 5 times more. In short, Solana is winning on adoption. Ethereum is still winning on institutional dollars. Put these stories together and you get an interesting picture. On-chain signals and unlocked data are quietly suggesting selling pressure might be running out of steam, while macro data hints at a calmer chapter ahead for rates. None of it is a guarantee, but it's a mix worth paying attention to instead of reacting to headlines alone. So here's one simple thing to do today. Next time you see a scary word like unlock or sell off in a crypto headline, spend 2 minutes checking where the tokens are actually going. Treasury, team, or the open market before you react. That one habit alone will save you from a lot of noise. That's today's crypto rundown. If these few minutes were useful, hit subscribe so you don't miss tomorrow's episode. Every day, 5 minutes, no fluff. See you in the next one.